What's up, guys? It's September 9th, 2024. Tough day in the markets. I think the read got pretty hard around here. Had a gap up and continuation, so that's great. Gap up, continuation. By that leg is what I meant. This was an interesting leg. Um, Daily chart, 45 minute. I kind of already know this gap doesn't close, but I just wanted to do it on camera because I was looking to see if this gap stays open pretty much all day. I wanted to see what was going to happen around here, and bulls closed this gap. So if you remember, this is the gap I'm talking about. That this was a gap bar, and if bears could keep price below the fits low, there would be at least some sort of gap. However, that gap got tested today, so the low of the sixth is 40.90. The high of today is 93. So we breached there's a negative gap by 3 points. That's what I'm trying to say. A negative gap is the opposite of a gap. Of course, I got hiccups. Why do I always get hiccups right when I start this thing? So there's a negative gap here. I'm gonna delete that, but there's a 3 point negative gap there. Good for the bulls. Yesterday we had a sell off. I think a lot of people got trapped here thinking we were gonna get a leg two. I know I was short here, but I hit out right before it turned around on me. Let's think about this. Leg one, pull back, leg two. I was not in this trade, but I was watching it, and it does feel a little more climactic, the market. Let's see. So we did 80 points in how many minutes? That doesn't even make sense. So in 1 hour, the market did 85 points intraday. What about here? Without the gap down, just intraday. Where's 85 points? 85 points. So it took the market 5 hours to do 85 points on the third, which was the breakdown. And it took the market 1 hour. Oh, wait, where did I pull from? So 85. I don't know what I was doing. Where's 85? 85 points in 1 hour. So this was a faster sell. It was a little more climactic. If bar 19 was the high of the range, or you could even say this body here, then this bull breakout is a breakout trying to reset the market cycle. Big gap up, bar one continuation. Bar two, I'm indifferent about bar two. It's not a bear body, so that's good for the bulls, but it's not a bear body, so that's also bad for the bears, I guess. Bears would want to see some sort of body. Bar three. Bar three has a small bear body, but the tail testing lows of bar one. Then we get a small bull rally here. We got bar four, and then 1, 2, 3, 4, 5. 5 bar micro channel. I think it's strong enough to see a leg two. However, what is this? So it's a gap up, a pullback, and then we rally into resistance. Bar 9 is testing the low of bar 10, which kind of had a big bar following, so this could be a breakdown point. And then bar 10 is a 2 bar reversal. I wasn't in this trade, but we got a 1, 2, 3, 4, 5, 6 bar micro channel into the EMA and then a pullback. So there were buyers at the EMA. Leg one, pullback leg two, pullback leg three, wedge bottom after a gap up. So we can think of this as a bar, a bull bar. And then this is a pullback. So if we measure the top of one, so that's about almost a 50% pullback. Wedge bottom, 23, 24. I think it's safe to get out of shorts. If you are short, I think you got to get out and accept that bulls have momentum today. 24, 23, 24, 25, 26. Spike, 27, opposite bar. Well, it's a flat bar. It's inside bar. So we can say that's the first pullback. Spike in channel phase. Leg one, pullback leg two, pullback leg three. I really thought this was strong enough to get a second leg. There were multiple gaps open. However, what is the context for today? Leg one, pullback leg two, pullback leg three into the 50%. Really big bar. If we follow the expansion contraction rules, expansion, contraction. Give me 2 seconds here. Then we gotta ask ourselves, is today big enough for a second leg, or is yesterday big enough for a second leg? So is this a pullback, or is this gonna get continuation? Yeah, I guess we just have to wait for the price action on that. That'll be interesting to see. I think the market's getting a little bit harder to read. I was feeling pretty solid with this price action and this price action, and then even up until bar 50, I was like, okay, yeah, continuation. Then I got a little shaky right around here. I was like, well, 51's a bear breakout, pullback, leg 1, pullback, leg 2, pullback, leg 3. 63 bounced off. Again, we're going range bound, breakout above the EMA, leg 1, deep pullback, leg 2, second leg trap. Or you can even call it like a leg 1, pullback, leg 2, pullback, leg 3, wedge top. However you want to call it, we got to look at the day from breakouts or market cycle perspectives to keep a consistent look. So yesterday's range, a consistent perspective. Yesterday's range is right here. We break out, market cycle restarts with a breakout, first opposite bar, bar 3. Then we channel. We don't see any opposite bars, but we do have 5 pushes up. So there is a wedge in here. And what I mean, push 1, push 2, push 3, push 4. Push 1, push 2, push 3. I miscounted, so it's push 1, 2, 3, and 4. Wedge top, breakout, deep pullback, leg 1, pullback, leg 2, pullback, leg 3. Bears fail to get the breakout below the EMA. They get trapped around here, wedge bottom. This is a strong gap up. You should get a second leg. We could think about it from a spike, deep pullback, rally perspective. The deeper the pullback, the less of a chance. So like if this was very shallow, we can go higher, but this was about 50% pullback, so it's not the weakest. They made a new high, and then we turned around and bulls got a lower high. So market cycle, right? Just breakout, and then we have opposite bars, counting second legs, third legs. So breakout, leg 1, pullback, leg 2, pullback, leg 3. Go range, breakout, leg 1, pullback, leg 2, pullback, leg 3, range, breakout, leg 1, pullback, leg 2. There's the market cycle, and then I like to really just pay attention to the EMA crossovers. So for me, this is a market cycle reset, and it's a good one because there's trap bears. That's why we look at gaps. So from a market cycle reset here, breakout, opposite bar, leg 2, pullback, 3, then this bar break each low. So okay, I hope I don't sound like I'm rambling here. I need to get. This is one leg, and then 31 is the first time it breaks the previous low, so that starts the second leg. However, with that being said, see, so then there's the third leg, because 38 breaks this previous low. With that being said, and there's the fourth leg, and that means we're range bound. I still look at opposite bars. I like to count opposite bars leg because it's visually easy, but I'm still also paying attention to the trend line breaks. Trend line breaks right here, 3 legs. Opposite bars, 3 legs. So I think you have to pay attention to both because it's just implied. Is it an implied leg or is it just a leg on the 5-minute time frame? Here's a triangle with a breakout. See? And if you wanted to even argue we're breaking out the high of the day, so the market cycle resets. Okay, yeah, it does. Leg 1, opposite bar. Leg 2, opposite bar. Leg 3, opposite bar. So there's your market cycle, range bound breakout. So there's many ways to read it. I think it's just important that we keep framing it in the same perspective. Market cycle, breakout, leg 1, leg 2, leg 3, reset, wait for the breakout. That's how I'm doing it. I like it. It's making things feel a lot more consistent. This let me draw on these gaps. And yeah, let me know what you guys are thinking. Are you guys trading breakouts? Are you guys trading whatever you see throughout the day? Or what are you doing? What you're trading? How's it going? Turn that blue. There's a gap for the bears. So now that we have bear gaps, bulls are getting trapped above the EMA. That is not good. Bears start to get legs lower, but they don't even get good. They get one bear gap below the EMA and it reverses. I think that was 23, 24. So now bulls are closing their gap. So since gaps are closing, we're in a range bound environment because gaps close in ranges. But from a range, right, the market cycle resets, and then these gaps start to stay open. There's a gap there. I'm going to clean this up before I post it. So there's a gap there. I just want you guys to visually see these gaps because, you know, I'm just focusing on the same things and it's working. Breakout, market cycle, breakouts, gaps. Are they open or closed? It's really important to know where trap traders are at. So yeah, there's some of the gaps. Let me go back and make sure we got them. Big gap up. No gaps within this leg. Oh, there's a gap right here. There's a micro gap. The low, the high of bar 7, 71, the low of bar 9, 7150. Yeah, so there is a gap here. There was a gap above the higher time frame breakout, but it didn't really last. Bears get gaps down, and then it gets filled by the bulls, and they get gaps open. Not a lot of gaps on the breakout. The high of 30 is 75, 75. The low of 31. So there's a zero height micro gap here, because the high is 5, 4, 7, 5, 7, 5. The low is 5, 4, 7, 5, 7, 5. So there's a zero height micro gap here, which is pretty weak. You know, when we see a breakout, we want to see a gap like 23, 24, 25 at the breakout point. Oh, that was the gap. There we go. So there are the gaps. These gaps are just more visual than accurate. Important thing is to recognize them during the day. So there's one gap right here. So here's a breakout gap, right? Here's a breakout gap above the EMA. So we know the limit order bears that had limit orders set here to sell the EMA are now trapped, but they get a relief on 77. They buy back shorts. 78 is a leg right here. All right, guys, that's about 10 minutes, 12 minutes. I hope you guys are doing good. I hope you guys are, you know, just doing okay. We're coming towards the end of the year. I'm starting to think about what I want to do next year. And I think it's important to, if you have New Year's resolution, I think it's important to get started on them now. Anyways, have a good one, guys. Thank you for your support. If you guys learned something, share the show. Thank you. Bye.